edition of Cozy, Charming, Crazy Real Estate, where we talk about everything real estate. And today we're going to talk about how to buy residential rental properties. Now, whether you are already an owner, operator type of landlord, or you're simply a passive investor, or you're thinking about getting into the market and purchasing residential rental properties, we're going to review the 5 most important considerations if you're thinking about doing so. So let's go ahead and get started with number 1. Now, the first consideration is probably a universal consideration, whether you're talking about buying a condo, single-family home, a rental, a place for yourself to live, or even a commercial property. Real estate is all about one word, and of course that is location. So when you're thinking about buying a residential rental property, you want to make sure that that location is beneficial to your rental property operation. Is it in a good area where you're not going to have problems with neighbors, you're not going to have problems with development around your property that could cause problems? There's a lot of considerations involved in location, but obviously location is our first consideration if we're going to be looking at rental property. Do not be tempted to go outside of your what I call green zones, and even just because a property might otherwise look good. Again, location is the key, and one of the ways that you can look at location is to look in the market, and I'm talking about the geographic market where you're going to buy. Let's call it a city, or you could call it a neighborhood in a larger area, and simply circle areas that you know are good rental markets. Now, these may not be the Beverly Hills of your particular area, but they're areas where they're nice, safe areas, good schools where people might want to rent. And circle them on a map and only look within your circles. Consideration number 2 is condition. Now, keep in mind that every dollar that you have to spend on your rental property is a dollar out of your pocket. It is a dollar that is that reduces your bottom line. So when we're looking at condition, we want to make sure that we understand it in all its forms. So we want to inspect everything before we buy. We're going to want to look at a general inspection, a roof inspection, plumbing, electrical. If you have a furnace and air conditioning, you want to make sure that those have been serviced by a licensed HVAC company within the last year. Most are not, but that's something you want to look at to make sure you're not going to have to spend money on any of that once you take possession and start renting the place out. You want to know that the property condition is also, or the design really, and condition are proper for a rental operation. Now, when we move into a home, we want it to make it look nice. We want it to reflect our tastes, and we may add certain refinements, anything from lighting to special plumbing fixtures in the bathroom, all sorts of nice things. What we're going to look at for a rental is that the features of our home are not only in good condition, but they are of the design and type that is conducive to low maintenance in a rental property scenario. So you want fixtures that are tough, rugged. You don't want to put in a $500 faucet when a $300 sturdy faucet that may not look as designer will still do the trick and keep you from having to replace it 2 or 3 times during a lease. You want to request all structural maintenance records from the seller before you actually put in your offer if possible. If not, you want to look at all this during your inspection period after your offer is accepted. But when you're a rental property owner, you want to keep, whether it's on your computer or in a physical filing cabinet, all the records of maintenance that has taken place on the property. And that is not just mowing the lawn and cleaning out the gutters every year, things like that. We're looking more for, did you put in new appliances? If so, you should have records of that, including any warranties. But as a buyer, we definitely want to look at all the maintenance records for the property, just because we want to know that it is repaired into good condition. And also, we would like to know about how much it's been costing to do these repairs, because that may be similar to what we're going to experience if we buy it. You also want to forecast potential major repair expenses by looking at features of the property that are likely to go out during your time that you own it. Now, one of the easiest to understand is a water heater. Water heaters typically have 10-year lifespan, so you want to know when was that water heater installed so that you can forecast when you might have to replace it. Now, properties don't have to be perfect, but we do need to understand that any defects in the condition are repairs that we're probably going to have to do, and that comes, again, out of our bottom line. Consideration number three is competitive position. Now, by this, I mean very specifically that you, when you have a vacancy, are going to have to compete against all the other vacancies in the area where your rental is located. So are you competitive in that you're going to get a rent that you're going to forecast? You're going to say, well, I'm thinking about buying this place. I think I can get so much in rent. That seems to be the market rent for the area. Well, are you competitive at that rent? In other words, do you have the features that other rentals in the area have? Are you located as convenient? All those things that will determine whether or not someone is willing to pay more or less in rent for your property. So think about how it compares to other rentals in the areas. Number 4, projected rate of return. We do definitely want to run the numbers and see how much we are getting on our money. Even with interest rates for savings accounts at 1%, 1.5% today, are you going to get that out of this rental property? We hope that we're going to do better than that. We are going to be putting a lot of effort into this particular investment, or we're going to have to put a lot of money into it from time to time for repairs and maintenance. So we want to make sure that this is a money maker. And so that at some point we do have to sit down and actually run the numbers, think about things like management reserve, maintenance reserve, quarterly maintenance, all sorts of things, so that we know what that bottom line rate of return is going to be. So, number 5, and this is one that a lot of rental property buyers do not think about, but it's also very important, and that is an exit strategy. Now, lots of times people buy rentals and they say, well, I can't see that far ahead. I just know the market is good and I want to buy this property. Everything, it checks all the boxes for what I need for a profitable investment. And they don't think about selling it down the road. Well, in reality, whether you sell it, your heirs sell it, or you come across a better opportunity that you can only invest in if you exit this particular property you're looking at, let's say, you want to have that always in mind. You always want to be thinking about, if I had to get out of this property, how easy would it be to sell it? And so your exit strategies have probably 3 main considerations. One consideration is the end of economic life. Now, if you're buying an older property, it's 30, 40, 50, 60 years old, and it still has a lot of original systems, electrical, plumbing, other things like that, you need to think about, do I want to hold on to this so long that at some point I am going to be forced to spend 10, 20 or more $1,000 doing these major capital investments? That should be one of the decisions that you need to make on when you should sell the property. Market conditions are also important. When you see that market conditions are more conducive to selling the property and pocketing a profit versus holding on to it and making just a little bit every month, then you should consider, should I hold on to this asset or should I let it go? Should I exit? And as I touched on just a second ago, if you're an investor, you're always looking for new opportunities to make more money. And therefore, you do know that you're going to trade, just as stock traders say, well, when I make a good profit on this stock, I'm going to go ahead and sell it. I'm going to put the money in the bank. I'll pay the taxes on it. I have all that after-tax money now to go buy something else. Well, residential rental property can kind of be like that. At some point, you're going to want to say, can I put my money somewhere else where I can get a better rate of return on my money? So those are the 5 considerations. Again, location, condition, and competitive position, projected rate of return, and then your exit strategy. Those are 5 major considerations in buying a rental property. So if you have any other questions, I hope you will, or have any questions, I hope you will leave them below in the remarks and in comments. And please, I hope if you like this video and it's helpful, that you will like the video. And please subscribe to Cozy, Charming, Crazy Real Estate, because we're going to be back again with another great edition. So until then, please take care, drive safe, and we'll see you then.